Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 20th of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. But as it's a Monday, of course, we'll take these in the context of the weekly moves as well. Just a couple of things to flag. First of all, the British pound trading at 127.3390 against the US dollar. Down on the week, down by 1.70%, but up overnight by 0.13%. So a little bit of pushback there from the pound sterling. Speaking of pushback, the Australian dollar has added 0.76% overnight against the US currency. Still down on the week, down by 0.32%, and down on the month by 3.18%, but a decent pushback for the Aussie, and that's dragged the Kiwi, the New Zealand dollar, higher too, and we'll look at some of the reasons for that a little bit later on in the video. Elsewhere, the Chinese yuan has pushed back against the US dollar, taking 0.19% off of the greenback overnight. Still down by 0.35% over the week, and down by 3.34% over the month against the US currency, but a bit of stability perhaps creeping into the yuan there. The dollar has also been on the front foot against the Canadian dollar and the Mexican peso. You can see the overnight gains there, 0.17% and 0.26% for the dollar, building on the weekly trend there. The dollar, for its part, starting the week largely unchanged, but it is up over the prior 7 days by 0.72%, and that's the strongest start I think we can say that we've seen for the dollar on a Monday morning for about a month. So the dollar index on the front foot. Can it continue to make further gains over the course of this week is the question. Speaking of making gains over the course of the week, let's have a look at some of these cryptocurrencies. Bitcoin and Ether both making decent gains in Asian trading and over the weekend. Weekly wise, Bitcoin's up 3.39%, but look at Ether, up by 30.26% over the course of the last week. So there's certainly some momentum there, and the excitement around the rebound in cryptocurrencies continues. Okay, what's on the calendar? Events that may move the markets today. Well, we've already had Japanese industrial production and capacity utilization data for March, and that was out at 04:30 this morning. To come at 0600 GMT, we'll have the first of the day's data in the form of producer price index data out of Germany for the month of April, both month on month and year on year reads there. And then at 9 AM, we'll have current account data out of the Eurozone for the month of March. We pause then until 12:30, crossing over the Atlantic for the Chicago Fed National Activity Index data for the month of April. So another chance to see how the US economy is performing according to one of these regional Fed indices. At 15:30, we'll have 6- and 3-month bill auctions out of the US. Always interesting to see the bid to cover and the appetite for the market, or from the market I should say, for this paper. At 16:30 then, I think probably the meat on the bones for today's calendar kicks off in the shape of central banking speeches. The first one at 16:30 GMT is from the Bank of England's Broadbent. Then at 17:05, we'll hear from the Fed Deputy Richard Clarida. And at 2300, if you're still in the market, then the Fed Chair, Jerome Powell, will be speaking at that point. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, Prime Minister Scott Robinson and his Liberal Party defied the polls to win the Australian elections held at the weekend. The Japanese economy has grown by 0.50% in Q1 2019, despite forecasts for a contraction of 0.10%. And on an annualised basis, the Japanese economy grew by an impressive 2.1%. It's also true to say that industrial production data released this morning for the month of March fell by a smaller amount than anticipated. So some better news for the Bank of Japan and Shinzo Abe. Meanwhile, a senior advisor to the German government tells the BBC she fears another euro crisis could be brewing. Dr. Lars Feld has said that Italy was struggling to stay out of recession and was vulnerable, with more than £2 trillion worth of outstanding debts and a banking system that is not as safe as we might hope for. So we've all known the vulnerabilities of Italy, but it's interesting to hear a senior German advisor espousing those in public and in an interview with a leading news organisation. Okay then, food for thought and something to take away with you into the trading day and beyond, and why not think about this? Money has been leaving US and EU equities year to date, yet indices remain elevated. And the chart here on the left, courtesy of Bank of America Merrill Lynch, and their weekly flow share report, shows us the year-to-date fund flows in billions of dollars. Investment grade bonds have attracted inflows of $86 billion year-to-date, but the European equity funds have seen outflows of $59 billion, and US equity funds have seen outflows of $60 billion. So substantial amounts of money have been leaving European and US equities over the last 4 or 5 months. And yet, if we look at the performance of the German DAX as a proxy for Europe and the S&P 500 here as a metric for US equities, we can see that though they've corrected slightly in recent weeks, they're still well elevated above their 2019 opening levels. So there's something of a disconnect here between money flowing out of those markets and the actual performance of them, suggesting that either they're being elevated or nothing, or there's an alternative source of funds that's propping up those equity markets. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, please do read this risk warning thoroughly. Thank you for your time today.